What's going on, traders? Andrew O'Connell with Pristine Capital coming at you with yet another late night edition of our market recap video for October 12th, 2021. Hope everyone had a good session today. Today we're going to really quickly walk through the price action in the indices, what this market is doing in terms of the trend. We're also going to talk about some of my trades for the day and a Twitter Spaces that I'm jumping on very shortly. We're going to have, I believe it's like 5 or 6 speakers. A lot of them have huge followings. I'm actually the one in there that has the smallest following, funny enough. But yeah, let's talk about all that. Quick risk disclaimer before we jump into the content of this video. Nothing in this video should be construed as investment advice or recommendations. Please follow your own trading plan and your own risk parameters. Last but certainly not least, do not YOLO your entire account into any one of my trades. All right, let's dive in, team. So box scores for the headline indices. S&P 500 as measured by the SPY closing down 0.25%. Nasdaq QQQ finishing down 0.35%, tied for our biggest loser. IWM small caps, our biggest winner, closing up 0.55%, showing some resilience in a weak tape. And then we have the Dow Jones tied for our biggest loser, down 0.35%. So this week is options expiration week. A lot of times during OPEX, you get this really choppy price action, and we're coming into OPEX in a pretty weak market trend as well. So yeah, today we got really just some OPEX chop. You know, at certain points of the day, all the indices were up, breadth looked amazing, everything looked good and well. And then at other times during the day, you know, markets flipped red. That's kind of the nature of the really choppy tape. We did resolve to the downside for 3 out of 4 of these indices. But take a look at the volatility. The volatility is coming out of the market, team. Realized vol is coming in, and this implied vol is also coming in. In terms of breadth wasn't horrible. You can see we had our best breadth in the small caps with 64% advancers, worst breadth in the Dow Jones, only 25% advancers, and pretty close to even for both the SPY and the QQQ. Finviz heat map, not many bright spots in the S&P 500. And look at this, we had Google, which had a major negative contribution to the headline indices. What's interesting, I actually looked up the SPY, and Google is essentially in there twice. So it's a market cap weighted index, so it ranks everything with a huge weight, you know, much bigger in the index. Then it has GOOG ticker, and it also has GOOGL. So yeah, it's really tough for the market to succeed when you have, you know, Google, Microsoft, Apple, Facebook, all trading in the red. We did have Tesla green, we had Nike green, Las Vegas Sands, which I'm currently long. So there were a couple of bright spots within the S&P 500. Overall, not the best picture here. Going over to our sectors. What's really interesting is solar stocks are catching a bid. Solar energy is now in our top momentum slot, team. Finished the day up 5.5%. So now in terms of momentum, we have solar energy, you know, regular, we'll call it dirty energy. And then we have global autos. So Tesla showing relative strength, GM, Ford, a lot of these companies, Tata Motors, I believe, even in India. And then a lot of the ancillary businesses too, such as AutoZone, one of our members at Pristine Capital. It's a nice long position there. A lot of these ancillary businesses. Let's take a look at some of the laggards, areas of the market that really did not do so hot. Blockchain assets were down 2.2%, had a bit of a correction, but these have been red hot, you know, for quite a while. So yeah, blockchain down on the session. What was another big loser? KWeb. Down 1.2%, or down 1.52%, excuse me. You can see KWeb has had, you know, really nice weekly performance, so a bit of a pullback for those Chinese equities. And then semiconductors were down 1.25%. So let's take a quick look at some of the charts of these sectors that we just mentioned. We'll also dive, you know, deep into the headline indices. So semiconductors definitely softening up here. And what it's starting to look like is the market's beginning to look through this semiconductor shortage. In the semis index, you can see we're pulling back to this 200-day moving average. Just looks pretty ugly, forming what could end up being a double bottom. We'll have to see if investors buy the semis at this 200-day moving average. We have solar stocks, this TAN ETF. A really nice performance today, but the real question is, can we get a move out of the monthly value area for solar stocks? Solar stocks have made a bunch of these essentially counter trend moves. And it's like, oh yeah, we're above the key moving averages now. And then it always finds a way to just fall back under. So we'll have to see. They've been basing for quite a while, since May. So maybe we get the move out for solar stocks. Pretty interesting. And then we have this cars ETF. Check it out. So the cars ETF making a move out of value. Let's take a quick look at our style factors, and you will see that the best performing style factor on the day was international momentum. Surprisingly, not an area of the market I think a lot of people are looking at. And then we had high beta up 0.32%. We had cyclicals up 0.34%. And really the big losers, we had high div low vol down 0.23%. We had quality down 0.22%. So really what that's showing us is, hey, the FANG names, they were down a lot, but there were a lot of other areas of strength in the market. Let's take a look at some of those FANG stocks. And let's take a look at Facebook. I actually traded today. So Facebook pulled down to this 200-day moving average. I was like, you know what? I'm going to take a shot at Facebook. This has been a horrible downtrend. It's down over 17%. And there's basically like a gamma wall heading into options expiration at 320. So I ended up picking this thing up right when it was around 320. I was like, you know what? This is a great level to trade against. So just for like a tactical short-term swing, I did buy some Facebook calls. But yeah, I think this is a good sign. Like, with Facebook performing so poorly, this has been a major contributor to the correction in the S&P 500. But at a certain point, every down auction meets its destination. So is Facebook going to go down, another 17%? It could happen. It could be like the Chinese stocks where they just start literally falling off a cliff. But down 17% is not so bad. And look at the volume that came in to buy Facebook at the 200-day, looking pretty good. We have Microsoft down 0.46%. This one doesn't look too bad though. We have this bottoming action over here, trying to hang on to this monthly value area. Doesn't look great, but does it look like Microsoft's about to like careen to a 30% plunge? Not really. Google was the really weak one as well. So Google closed the worst. We rejected this 20-day simple moving average. Google not really looking so hot. And then we have Apple. I actually took a lotto trade in Apple today because I can see, we have this monthly value area low right here. Apple, they actually have an event coming up on October 18th. So I said, hey, I'll take like a little mini lotto exposure to Apple. And let me just see if some investors, maybe they buy into it ahead of that event. After hours, we did get some news that Apple, they're essentially warning investors, hey, with this chip shortage, we're actually not going to be able to produce as many iPhones. So that could really negatively impact the stock. We'll have to see tomorrow. But the moral of the story is, it's really tough. Like, if you're just an index investor, like, yeah, is the S&P 500 going to go up or down? Like, that's really like your game. It's almost like a rigged game in that really all you're playing are like 4 stocks, like 4 or 5 names. Like, if those 5 names enter downtrends, basically there might be 505 stocks in the index, but so long as those 5 are not looking good, your investment's not really looking so great. If those 5 stocks are really ripping, then you're going to be doing great as well. So it's kind of funny. It's like, I don't think many people know in the S&P 500 that it's like really like a bet on just, the 5 tech monopolies. But yeah, we'll have to see. Let's dive into our headline indices and just take a look at where we are. So S&P 500, my proprietary market trend signal is at a -1, and this is on a scale of -3 to +3. Typically when we're in a -1 to a +1 market, that really just means like the market's not really trending. The market's kind of chopping around. As you can see, we were in this downtrend for maybe like 5 or 6 weeks, and now over the last like 2 to 3 weeks, we've kind of just been chopping back and forth. So I think this is anyone's guess. Like, do we resolve to the upside? Do we resolve to the downside? Right now, we're moving sideways. But we did close below this monthly value area low. That's not a good thing. We were not able to maintain price above this 5-day exponential moving average. And we're trading back into this chop zone that I designated by these 2 red lines. So overall, this really is not the best action. It's very choppy. Could we end up having a retest at the bottom of this range at 42.72? Absolutely. So now that we're below this monthly value area low, that's what I'm going to be looking for. Unless we can just like explode through here tomorrow, I'll be expecting, hey, 42.71 could be a logical destination point. Let's take a look at the Nasdaq. Nasdaq finished down not down 0.31%. Right now it's trading down 0.3% in the futures trading. But yeah, Nasdaq just doesn't look good either because it's all about, those select few mega cap tech names that really just dominate this index. So we'll have to see, if Facebook reverses trend and some of those other names start following suit, maybe we have a better sequence in the Nasdaq, but this is certainly just not where I want to be invested in for sure. And then Russell only indexed to close positive today. The Russell price action is just continuing to tighten. Look at the weekly chart. So we have since February, we've been in this range. February 1st is when we haven't moved anywhere from February 1st. We're basically trading at the same exact level now. So it's been eight and a half months almost that we've just gone nowhere. Now look at the last 1, 2, 3, 4, 5 candles. 5 weeks tight, team. So eventually we're going to have our move out of this consolidation. I think it's going to be a powerful move. My bias is that we're going to move to the upside because there are so many hedge fund shorts in the Russell. But we're just going to have to see what happens here. The market still trading tight. We do have some gamma walls in place into options expiration for the small caps. And all these key moving averages are just coiled around each other. We're just stuck inside of value. Dow Jones down 0.19% after hours. Dow Jones lost the 20-day moving average. Not a good sign. Could we test this bottom of value? Absolutely. Yeah, Dow Jones also was showing some promise, but now it's more just, hey, we're chopping around. Now even, potential downside bias to this monthly value area low. So yeah, these indices, I don't think they're too exciting for investors that are bearish or bullish because we're just chopping. All right, let's take a look at some of my trades for today. So put on a couple of positions. I closed out. I had some SPY puts that I closed out for a very small winner. Closed out for 964. I'd paid 948. This was in the morning when the market was starting to catch a bid. I got long the HUT November 19th, 10 by 12 call spread. I'm going to talk about this a little bit more in our Twitter space that I'm doing at 8 o'clock. And also, talk about this with Pristine Capital members in our pre-market webinar as well. I day traded Tesla for a small winner, 40-cent winner, nothing crazy. I got a small base hit there. As I said earlier, I did get long the Facebook November 19th 320 calls for 1585. This one already nice and in the money for me. I took my Apple Lotto trade, and then Crowdstrike. They actually announced a new product. And Crowdstrike, this has been a long time fan favorite by growth investors. I actually love Crowdstrike myself. I think it's a great company. They do cybersecurity, and it's a software as a service model. So it really doesn't get much better than that. They announced a new product. I bought this diagonal call spread, and I sold the 260 strike call expiring October 15th. So it expires literally in 3 trading days. I was like, hey, maybe if this thing makes a nice move to the upside, it moves up to this monthly point of control. Do I really think it's going to blast through during OPEX week while we're chopping around? Probably not. So I've been using a lot of diagonal spreads in my trading just to reduce the cost of my positions and just in case we continue to chop. But yeah, Crowdstrike looks solid, and I love this bottoming formation here. This is a very similar pattern to what Crowdstrike did back in February. Or I believe it may have been March. Let me see. But look at the way this one bottomed. Yeah, this is in May, actually. Excuse me. But we had, just choppy action. Sellers couldn't take it lower. And then we started to make this turn here right below the key moving averages. Look how similar that looks to the price action now. We're doing the same exact thing. Sellers tried to take it lower. They couldn't. We're chopping sideways. Now we're above the 20-day simple moving average. So really liking Crowdstrike. So it does seem that this is a bit of a stock picker's market because we're having a lot of stocks that are still moving up in this market. It's just that the mega cap tech names are showing no relative strength. So we're going to have to see what happens into the end of the week. That being said, hope you all enjoyed this video. Tune into the Twitter Spaces, which is going to be on at 8 o'clock p.m. We'll have more discussion on the markets, on the market trend, etc. And looking forward to seeing you all tomorrow.